Taibbi. But before I do, let me read a sentence from a recent paper by Dean Baker, who concludes most of the pension shortfall using the current methodology is attributable to the plunge in the stock market in the years 2007 to 2009. If pension funds had earned returns just equal to the interest rate on 30-year Treasury bonds in the 3 years since 2007, their assets would be more than $850 billion greater than they are today. And this, he quotes David K. Johnson of Tax.com. The average Wisconsin pension is $24,500 a year, which is hardly lavish. But what is stunning is that 15% of the money contributed to the fund each year is going to Wall Street in fees, which is why we now ask the question, why isn't Wall Street in jail? Actually, that's the title of reporter Matt Taibbi's new article for Rolling Stone magazine. In the piece, Matt writes, quote, "Nobody goes to jail. This is the mantra of the financial crisis era, one that saw virtually every major bank and financial company on Wall Street embroiled in obscene criminal scandals that impoverished millions and collectively destroyed hundreds of billions, in fact, trillions of dollars of the world's wealth." Well, I interviewed Matt Taibbi on Sunday about his report. Now, I want to play an excerpt of our discussion. We're seeing these mass protests in Madison, Wisconsin, and there's other protests that are happening. We see the working poor, the middle class, under tremendous stress, and yet they're the ones who are being hit hardest, not Wall Street. Explain what has happened. Why isn't Wall Street in jail?
Well, it's an incredible story. I mean, just to back up, provide some context, I think, for this Wisconsin thing, and especially for the Ohio thing, given what their governor used to do for a living.
Explain.
Well, he was an employee for Lehman Brothers, and he was—
This is Governor Kasich.
Governor Kasich, yeah, and he was intimately involved with getting the state of Ohio's pension fund to invest in Lehman Brothers and buy mortgage-backed securities, and of course they lost all that money. And this broadly was really what the mortgage bubble and the financial crisis was all about. It was essentially a gigantic criminal fraud scheme where all the banks were taking mismarked mortgage-backed securities, very, very dangerous, toxic subprime loans.